welcome. You're watching Market Fatafat on ET now with me, Snehi Shah, and with me is Cheryl D'Souza. Now, this is a show where we'll take you through all the stocks that are buzzing in today's trading session on the back of either news flows or technicals. But before we do that, Cheryl, let's take a look at the market. Quite the dilly-dally trade for Nifty today, if we can say that. But we're back to gaining ways. Isn't it?
Absolutely, Snehi. Actually, at 11 a.m. when I was checking the markets and the way how the markets were panning out, we had actually slipped off the day's highs after the record high in the negative territory, deep in the red actually for the Nifty at that point in time. But the advanced decline ratio was very much skewed in the favor of the gainers. That's exactly how it is transpiring right now. If you look at the advanced decline ratio, very much tilted still in the favor of gainers. So hopefully this momentum that we've picked up over the last 1 hour or so will sustain, and we will be hopefully ending in the positive territory. But yes, that we can ask our technical guests. But for now, if you look at the Nifty, it is in the positive territory. Smart recovery coming in for Nifty. Now it's trading higher by about 130 points. It's reclaimed that 22,500 mark, and it is just kissing distance away now once again from 22,600 mark. Remember, on an intraday basis, Nifty hit a record high level of 22,619. Talking about Nifty Bank, outperforming the benchmark indices, as you can see it on your screen. And while from now, 1% uptick coming in for Nifty Bank, outperforming the benchmarks. Take a look at what the broader markets are doing, your mid-cap and your small-cap index, and how they're performing in trade right now. And there you go, your 0.5% uptick coming in for small-cap index, mid-cap also holding on to mild gains. So that's the way how the markets are looking like. Benchmarks making sure they make a roaring comeback.
Well, absolutely. And broader markets also largely in tandem with the benchmarks as well. But viewers, with that, let's kickstart the show then. And today on the show, we are being joined by our team of researchers as well as our technical expert. On the research front, we have Gaurav as well as Ashish, Ansh with us. On the technical front, we have Ashish Kyal joining us today. Gentlemen, thanks so much for taking the time out and joining us today. With that, let me kickstart the show then and talk about two stocks, or a whole set of chemical stocks that are abuzz in trading session, but particularly alkyl amines as well as Balaji amines. Both of these stocks are in today's trading session. Now, this comes on the back of the news that the chemical acetonitriles capacities have been impacted in Taiwan due to the recent earthquake in the area. Now, this news flow is positive, however, for Indian amine players and producers of these chemicals, the likes of Balaji amines as well as alkyl amines as well. And Balaji amines has the capacity to produce 9,000 MTPS of this chemical, while alkyl amines has a much bigger capacity coming in at 30,000 metric tons per annum. So, well, on the back of this news flow, Cheryl, like they say, one man's loss is another man's. It's unfortunate what's happening in Taiwan, but on the back of that, the Indian chemical sector is a buzz, and both of these stocks, especially alkyl, up 10.5% and Balaji amines up 7.6% as we speak.
Absolutely, that's the chemical players that are in focus on back of that particular development. But let's talk about Dabur India, and that particular stock has seen a sharp knock over the last 1 hour or so, Snehi, and also this because of the Q4 updates that's coming in and sluggish commentary coming in from the company as well. They're saying that the operating profit is to grow slightly ahead of the revenue, but apart from that, what they're saying is their healthcare and F&B segments are expected to register low single-digit growth. They're saying that in India business, the HPC segment is expected to grow in high single digits. Apart from that, what Dabur has also said that the international business is expected to register a double-digit growth in constant currency terms. They're also saying during the quarter, the rural growth picked up. This was fueled by the price rollbacks in staples, which actually led to the gap between the rural and the urban actually going ahead and narrowing. And in line with the strategy to invest behind their brands, they will see higher A&P spends, and also consolidated revenue is expected to register middle single-digit growth as well in the quarter gone by. They're also saying that the demand trends have remained sluggish during the quarter, and the gross margins are likely to continue to witness expansion on account of deflation in input costs and cost-saving initiatives. But the headline over there is the fact that the demand trends were sluggish in the quarter gone by, and that's the reason why the stock is now actually at the day's lowest point.
Well, all right, let's get a move on then and talk about an entire basket of stocks. And Gaurav, I'm going to come to you for the entire IT pack today. And IT has been in focus over the course of the last few days on the back of various brokerage notes. Yesterday we did have one from CLSA. Today also on the back of a brokerage note, I believe.
But before that, let's keep an eye on Federal Bank as well, because we have got some upgrades from Federal Bank, where we have seen the bank which has shown total advances growth which was at 20% on a YY basis. If we also talk about the deposits growth, it was almost at 18.4% on a YY basis. Now the CASA ratio has deteriorated by 123 bips. But if you look at the bank's performance, it's actually stronger in terms of deposits and as well as in advances, and it was all well in line with what the street and as well as what the management was expecting. But on the back of this, we have seen brokerages having a contra view on this. So for example, for they have maintained sell rating with a target price of 135 rupees because they believe earnings may get impacted because of the wage revision and cost to income could inch up even further. And at the same time, we also have Nomura, which has maintained buy rating with a target price of 190 rupees because they believe that the loan to deposit ratio for the bank is actually at 84%, which is lowest amongst the private banks peers. And on the back of this stock is definitely going to be in focus. If you look at the stock performance, it is down almost 1.5% in today's state, but we will definitely keep an eye on this stock and see how it performs in the days coming.
All right, Gaurav, no doubt that Sneha asked you about the IT sector. You chose to speak about the banking sector. We understand the love for the banking space given the fact that you are a banking researcher. He tracks it very closely. But let me check with Ansh, and this time I think Ansh will be able to talk about Suryadev because Ansh doesn't track the sector, no doubt. But Ansh, Suryadev, small finance, why is this one in focus?
Yes, so the stock is actually over 9% trade today. And also the company has shared its Q4 updates. The disbursement in FY24 stood at over 6,900 crore, which is up by 36% on year-on-year basis. Also, the gross advances is up over 40% to 8,650 crore. So if we talk about the total deposits, it has been registered at 7,775 crore, which is again up by around 50% year-on-year basis. Talking about CASA ratio, even that has improved 160 basis point on quarter-on-quarter basis to 20.1%. Now, if you see the chart of the stock seems to have given a good decisive breakout from its cup and handle chart pattern, and it has also surpassed about 50 and 200 EMA levels. So for those reasons, the stock is in focus.
All right, Ansh, thanks for taking us through that. But now let's get a technical check on Varun Beverages as well, Ashish. And stock is holding out pretty smartly in today's trading session, also up 4% over the course of the last 6 months, also close to 60% gains. So are you penciling any more upside for this stock? What's your view here?
You can clearly see very strong run up. Volumes have been huge yesterday, and even today the volumes are picking up. So the overall, there is a very strong breakout from the levels of around 1420, and the stock is headed much higher. I think on the upside 1620 is the target for Varun Beverages, and also it has taken very good support near the moving averages. And on the downside, I think one can maintain a support near the low of around 1480. So as long as 1480 is intact, 1620 can be expected in this stock.
All right, Ashish, thanks so much for taking us through that. Let's talk about another big buzzer in today's trading session, and that happens to be KEC International. Cheryl, what a move on that stock, right? Because as of now, also the stock is up 9%. Remember, earlier in the day, the stock zoomed 8% to a 52-week high of 795.2 rupees. It is still over there at fresh 52 high levels as well. And this happens after the company bagged an 816 crore order across its various businesses. Now, civil business has secured orders for infrastructure projects in India, including setting up of a steel plant in North India, building a cement plant in Central India, and setting up a plant for carbon derivatives in East India as well. The company's transmission and distribution business has secured orders of supply in the US, while the cable business has also been tasked with to supply various types of cables in Indian as overseas markets. Now remember, also in another recent news flow, the company has won a major order recently as well. On the 22nd of March, the company did announce that they had won a separate big order of 1,004 crore rupees across various businesses. So very soon after that, they have gone ahead and bagged yet another order of 816 crores. So this is bearing well for the stock, and on the back of this news flow, the stock is up almost 9.5% as we speak.
Absolutely, that's KEC on a roll when it comes to the order win, and also making sure that it makes it to the Fatafat list as well. But Gaurav, now coming back to you, and it is once again the IT stocks that are in focus. If you could tell us this time around why they are in focus.
Well, yes, IT stocks are in focus because JP Morgan has now come up with a note where they have upgraded the target price as well as the rating of the stock. So for example, if we talk about Persistent, they have upgraded to overweight rating target price of 4,400 rupees. For LTM they have upgraded the rating to neutral with a target price of 5,200 rupees. And for KPIT Tech, they have upgraded the target price, kept the target price same at 100 rupees while upgraded the rating to neutral rating. So what they believe is that actually demand environment that we have seen in the IT stocks is going sideways. And if we look at the bottom that IT had reached into second half of CY23, there is no coming back. So for example, they are not seeing any kind of improvement in 4Q. At the same time, they are not seeing any kind of improvement in 1Q FY25 as well. They are expecting results to be poor in 4Q exit rates, and they are actually expecting deflation in the FY25 guidance from the IT companies. But within this, Infosys, Persistent, TTS are actually some of the stocks which they believe where they have maintained their overweight rating. So what they believe is that, for example, for FY25 guidance, they are seeing 2 to 4% of the guidance from Infosys. For HCL, they are seeing the guidance of 4.6%, which could surprise investors in a positive way. And at the same time, they also believe that mid-cap IT stocks could outperform the firm, and at the same time, ER&D stocks could outperform the entire IT pack. And on back of this note, they are actually being a little, they have changed the target price, and at the same time, they have also changed the rating for IT stocks, and definitely on back of this note, IT stocks will be in focus in the days coming ahead.
All right, IT stocks are going to be in focus, and we've also seen what that sector has been doing of late, isn't it, Sneha?
Well, absolutely. On the back of all of these brokerage notes that we've been getting over the course of the last 2-3 days consecutive, so IT is definitely a sector that's in focus.
And let's not forget they will kickstart the earnings season come next week.
Well, absolutely. IT companies will be starting the earnings season with TCS and Infosys taking the lead. But Ashish, let's keep it with IT and talk to us about TCS, because it's a stock that has not done much in the last 6 months or the 3 months. In fact, generated negative returns over the last 1 month as well. What are you spotting on the charts for this stock?
I think the overall IT space can reverse back on the upside and start showing some positive traction. TCS formed a very important low around zone of around 3,830 and showed a good bullish candle yesterday, and today there is a continuation pattern as well. So the overall tone for TCS, I think, is positive. We can expect the stock to move back towards the level of 4,200 on the upside, which is the peak which we saw before the correction, and on the downside it should maintain the support level of around 3,830 levels.
All right, moving on, let's talk about the AU Small Finance Bank. No doubt this one also is in focus on back of its Q4 updates.
Yes, that's right. The stock is in focus on the back of Q4 updates only, and the stock is up over 3% in trade today. So basically, the company has, or the stock has reported total deposit of around 87,192 crore, which is up by 26% on year-on-year basis, whereas CASA deposits has been reported at 29,126 crore, which is again up by 9% on year-on-year basis. Whereas if we talk about gross advances, it has been registered at around 74,000 almost, which is up by 25% on year-on-year basis, and total gross loan portfolio has also gone up by 28%. Also, if we see the chart of the stock has touched 2-month high level today, and also registered biggest single weekly gain in almost a year.
All right, Ansh, thanks for taking us through that. Ashish, I'm going to come back to you and let's talk a little bit about technicals on Rainbow Children's Hospital. Now, this stock's performance has been surprising over the last 5 days. It clocked in a 10% surge almost just over the course of the last week. So help us explain this move, and what are you penciling in on the charts? Are you seeing more up move?
Yes, if you look at the stock, it has been forming a very clear higher low pattern. It is protecting its 20 days average, bouncing back from there, and also very interestingly, it has not given a close below the prior day's low since around, I think, more than 10 days now. So the overall trend remains bullish for the stock, and it can move towards the prior peak, which is around 1480 on the upside. That remains the target level, and on the downside, one can maintain a stop loss of 1320 levels.
All right, so that's the take coming in on Rainbow Children. On that, we'll slip into a break on this edition of Market Fatafat. When we come back, we'll through more stocks on the other side. Don't go anywhere. Welcome back. You're watching Market Fatafat on ET. Now let's talk about the other stocks that are moving in trade. Let's take a look at Chennai Petro as well as MRPL. Both of these counters are in focus. Remember that we've seen a sharp rise in the crude oil prices in the global markets, and back home you had the government that hiked the windfall gains tax on the domestic crude. It's increased now to about 6,800 rupees per ton as against 4,900 rupees per ton. However, there is no change in windfall gain tax on petrol, diesel and ATF export. But the fact that the government has gone ahead and increased their windfall gain tax on crude once again on back of the fact that we've seen a sharp in the global crude oil prices. Keep an eye on Chennai Petro as well as MRPL.
All right, well, that's on the fundamentals. Let's go across to Ashish now and talk about Bharat Forge on the technicals. Ashish, and help us understand, the further upside, if any, that you're penciling in for this stock, because it's not done much over the course of the last 6 months or the last 1 month. So what are the next levels that you're spotting? What's your take?
See, if you look at Bharat Forge, yes, the stock has not done much, but if you look at the entire sector, that has outperformed. And Bharat Forge has formed a double bottom pattern around 1088 level. And it looks like there is a possibility it can give a breakout above the neckline of 1200. See, the overall tone for Bharat Forge, I am going to be bullish, expecting that it will cross that 1200 mark, will move towards the level of 1280 eventually. And on the downside, as long as the support, which is at 1110, remains intact.
All right, let's get a move on then and talk about Avenue Supermarts. That's another buzzer in today's trading session and doing pretty well for itself, up almost 4% as we speak. Now, shares of this company operates the DMart chain of stores, and the shares surge as high as 6% today to hit 4,715, which is a new 52-week high today. We've slipped slightly below that price as of now, but not much to worry about because the company has announced a 20% rise in standalone revenue for the March quarter. This see their Q4 update coming in, and revenue is expected to come in at 12,393 crore versus 10,337 crore, up almost 20% when you take a look at that. And the revenue growth is higher than the 18% that was witnessed in the 9 months of FY24. This is largely led by same sales store growth, which is the SSSG of 11%. Now, the SSSG recorded by the company is the highest in the last 5 years, and that is actually what is aiding the stock today. The company added 20 stores during the quarter, which was better than what the street was expecting. Total stores added in FY24 are 41, taking the total number of stores of the company as of March 31st of this year to 365. Now, average revenue per store metric also continues to improve, and on the back of this, Macquarie has also come out with a note on Avenue Supermarts. They've maintained an outperform rating with a target price of 4,500. So, Avenue Supermarts also in trade today.
Absolutely, and this particular stock has been on everyone's radar of late, right? With you have back-to-back upgrades coming in from brokerages, also better than expected Q4 numbers aided in that stock. But Ashish, let's talk about Tejas Networks. And how is this one actually looking on the charts to you? There was a time when everyone would talk about the Tejas Networks, and now it's actually fallen off the radar is what I felt. 13% of the stock in the last 6 months. Where is headed now?
If you look at the stock, yes, I absolutely agree that not many are talking about the stock. But if you look at it, there has been a very sharp recovery from 650 levels to 780 now in just 4 days of time. And that's a very smart recovery, which has taken out the last falling segment in faster time. That indicates the trend for this is now reversed back on the upside. So I think the risk to reward is going to be very appealing here, because we can expect the Tejas Network to reach towards the level of 850. And on the downside, one can maintain a stop loss of around 740 levels.
All right, let's get a move on then. And Ansh, let's talk about Coforge. The IT pack is in focus, but particularly this stock has been in focus today on the back of a brokerage note. Take us through that.
Yes, and the stock is up over 3% in trade today. So actually, JP Morgan has maintained an overweight rating on Coforge with a target price of 7,000 rupees, which is almost like 20% away from current market price. Coforge has also been highlighted as a class-leading cross-site growth hero with a track record of outperforming during the downturns. Also, there are expectations for continued outstanding client mining and structural margin expansion after ESOP-led dilution. Now, analysts anticipate industry-leading earnings growth at reasonable valuations for Coforge. Also, if we see the chart, the stock seems to have given a good breakout from its trading range, which was intact from last 10 sessions.
All right, so that is all about Coforge. Let's go to another defensive sector then altogether. Ashish, Ipca Labs, pharma sector that I'm talking about. How is this one looking on the charts to you now?
See, I think Ipca Labs formed a very classic round bottom kind of a pattern, giving a very strong breakout in today's session. And it has also managed to take out the previous peaks, which was protected for, I think, nearly 2 or 3 times. So the rise is also accompanied with good volume. So there are all the positive reasons I'm seeing on the chart for the stock to move towards the level of 1380 on the upside, and one can maintain a stop loss which is near to the day's low of around 1220 level.
All right, let's move on then. And Gaurav, in a market that's doing relatively well for itself, you've picked out Angel, on a stock that is tanking away in today's trading session. Tell us why this is happening.
Talking about Angel One, we have got monthly and quarterly updates from the company. So if you look at the quarterly updates, they were fairly in a positive trend, but talking about specifically about the monthly updates that the company has shared with us, for the month of March, the numbers have gone down for most of the segments for the company. So for example, I have to talk about some specific segments. If we talk about gross client acquisition, it was down almost 17% on a month-on-month basis, although it was up 14.3% on a quarter-on-quarter basis. Number of orders were also down almost by 23% on a month-on-month basis. And if we talk about average daily orders, though those were also down almost by 11% on a month-on-month basis, while they recorded an upward trajectory of 32.3% on a quarter-on-quarter basis. But all in all, the negative impact that we have seen on a monthly basis has hit the stock price, and if you look at the stock price also, it is down almost 4.5% from the beginning of the session. And given that the monthly updates will decide some kind of trajectory from here on for the company, it is really interesting to see how the company will recover from these levels and how the company reports the numbers for the quarters and for the months coming ahead.
All right, moving on, Ashish, another one that you picked up from the pharma pack, Glenmark Pharma. How is this one actually looking to you on the charts? Because this one has had a good run with the rest of the pharma pack. Now, do you see more further scope of upside?
Yes, if you look at Glenmark Pharma, that has given a very strong break on the upside, and it is trading near 52 weeks high and not stopping anytime. So the overall sector looks very strong, and I think Glenmark Pharma from here can head towards the level of 1100, and one can maintain a stop loss for the stock around 907 levels.
All right, let's move on. And Ansh, let's talk about the big nifty gainer today, and that happens to be HDFC Bank on the back of its quarter 4 updates. Take us through that.
Yes, so actually the stock has reported gross advances which is up by 1.6% on quarter-on-quarter basis. Also the deposit as on March 31st has been reported at 23.8 lakh crore, which is up by 7.5% on quarter-on-quarter basis. The CASA deposits is also been registered at 9 lakh crore as of March 31st, which is up by 8.7% on year-on-year basis. Also, if we see the charts, the stock has touched 2-month high on intraday basis, and it has also been advancing for 6th consecutive session. Also, stock is top contributor in the up move of Nifty and Nifty Bank today.
All right, so that is the HDFC Bank, and a couple of news flows actually coming in for HDFC Bank. You also have foreign shareholding in the HDFC Bank that's fallen to about 47.83% from 52.3%. Remember, the analysts believe that the fall in the FII shareholding could lead to a fresh MSCI flow of about $3 billion, and it completely depends actually the MSCI discretion. There's no compulsion on that particular front. And you also have Goldman Sachs coming with a note, given the fact that it was a good solid performance by HDFC Bank. So Goldman Sachs is giving thumbs up, raise the target price to 1,950 rupees per share, Snehi.
Absolutely, Sharon.
But it's not only HDFC Bank that's actually been seeing a lot of upgrades of late. You also have OMCs that have seen a lot of upgrades, isn't it, Gaurav? But today you're not talking about that, is it?
Well, yes, we have seen upgrades coming up for OMCs, but today we are specifically talking about the Brent crude price because it has now hit the 5 months high levels. Brent crude is almost near $89 per barrel, and this is actually, if you look at the 2024 low levels, now it has increased almost by 19% so far. So what has led to this rally is basically there are some fresh supply threats which are coming up from the Middle East, and at the same time we are also seeing Ukrainian drone strikes coming up on Russian oil refinery. So this is a threat for Brent price from here on as well. And if we talk about the OMC specifically in India, this is going to impact negatively for them. So for example, if we talk about the crude price impact rise of, so for example, if we talk about any kind of 0.5 liters, 5 rupees of liters, if we see an impact on BPCL or FCCL, it basically impacts 7% on BPCL's IOCL's margins, 8% on BPCL's margin, and it's for HPCL it impacts 11% almost. At the same time, we are also seeing that Singapore DRM has been going down significantly, and this has been in a trend. So how this is again going to impact the OMCs is that, for example, for every dollar per barrel drop in GRM, we see for MRPL, for example, we will see an impact of EBITDA almost by 1,000 crores. Chennai Petro, we will see the same impact on EBITDA, which will impact the EPS almost by 30%. For IOCL BPCL, again, we will see a drop of 16 to 14% in the earnings, and for RIL, we will see a drop of around 4 to 5% in the earnings because of this impact in GRM. So all in all, because of this, we are seeing some pressure coming up on OMC, specifically on the oil marketing companies like HPCL, BPCL, and IOCL. All the stocks are down in today's trade, and we will definitely keep an eye on these stocks and see how it performs in the days coming ahead.
All right, thanks Gaurav for taking us through that. Ashish, let's talk a little bit more about the technical front, and you've picked out Trent today on your radar, and this stock, what a performance in the last 6 months, right? Because it's doubled itself in the last 6 months. So what is the direction that you're seeing the stock moving in going ahead?
Since 19th February, the stock is moving in a broad range, and it is yet to give a breakout, but it looks like the correction of the consolidation is now over. We can expect the stock to give a strong breakout and move towards the level of around 4,350 on the upside. And on the downside, one can maintain a stop loss of around 3890 levels.
All right, let's get a move on from Trent. So those are the levels that Ashish is spotting on Trent. But let's talk about two more stocks that are in focus today, and that is GE Power as well as Jai Prakash Power. Both of these stocks are in focus today because, and also shares of GE Power surged 11% today. Hit its new 52-week high of 369 rupees a piece, slightly lower than those levels as of now where it's trading. The company has backed two orders worth 775 crores from JP Ventures, and the order are for the dilation and evacuation supply of wet limestone based orders, and this is also for the FGDs of the Nigri super thermal power plant at Nigri and Bina thermal power plant at Bina in Madhya Pradesh. And GE Power has said in a regulatory finding, and they're also saying that the Nigri super thermal power plant order is worth 491 crores, that is due to be completed within 33 months, while the thermal power plant order worth 285 crores is set to be completed within the next 30 months. So on the back of this news win coming in from JP Power for JE Power, both the stocks are doing pretty well in trade today as we speak.
All right, so those are both the counters that are a buzz on back of that particular news development. But on that note, we slip into a break on this edition of Market Fatafat. When we come back, more stocks to discuss on the other side. Don't go anywhere.
If you like this video, then like, share and subscribe to ET Now.